Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 17th of September, 2018. We're about 4:33 p.m. Central Daylight Time. I'm back from my trip to Washington, had an absolute great time, and I'm one of the people that got to see the Oval Office and where the cabinet members go and visit where Sarah Huckabee has her press conferences from, and much more than that. It was just a fabulous trip. In any case, what we're looking at right now and why I've been waiting is the president said after the market he was going to make an announcement on China. I don't know what that means. Is he going to put on the tariffs? How big will they be if he does so? The word is 10% on $200 billion. I don't know, but we'll see. Right now, the impact of everything, if you watch the grains, is they continue to sink. And the one thing I realized when I was gone is there's nothing here to lift those grain markets right now. Even a falling dollar, and yes, we've had a falling dollar now for about a week and a half, 2 weeks, if you go back to your chart action. That's not lifting it. So my guess is it's going to take what we call that old harvest low. I know when I got back this morning, I met with our grain analyst and we were talking about that. And I said, you know, the one thing that's clear to me is that the market's going to have to get to a point where it gets so cheap that people have to decide, hey, maybe I'm just not going to sell my grains, whatever. A lot of people that thought they would lock in prices over the past week or so because they were cheap have found they've gotten cheaper. And what I mean by that is when you look at the bean market, it's just recently gone from $8.8625 down to a low of, as you can see here, in the 821 zone, bounced up today 2 cents. So for the week, we're up 2 cents on a weekly chart. And that's all it is. This is the weekly chart of only closes. When you go to a daily chart, you see how the market's just been drifting away, and now we're at these old lows. Does the market decide to punish everybody that's in the market and back off from that and get another thrust to the downside, maybe even get under that $8 area? I don't know, but I can tell you what the chart action is. What I can tell you the chart is you've got a pattern of lower highs, lower lows. That is bearish. When we take a look at the market, it's trading under the 18-day moving average of closes and rallies just last week when I was gone to that 18-day. Nothing changed it. The market has still got the lower highs, lower lows. It stopped right against the resistance. If you look at today's low, it was 821.5, and the Bollinger Band is 819.75. So it's possible the market might want to grab some traction against that, especially considering that the market is oversold. So what we have is a market that's in a downtrend. The bias is down. It is oversold and approaching Bollinger Band support. In the meal market, there's more room to still fall. You've got the lower highs, lower lows. You'd have to get back up and over 318.90 to break this pattern of lower highs, lower lows. The bias is down since you're under the 18-day average, and that gives resistance at that number, currently at 312.30. That'll probably drop a little bit when we open tonight, with projected support maybe coming in at the lower band of 301.20. Unlike the last break that we had here when you had an embedded reading, you don't have that right now. That's why I think maybe the support will try to grab there. Support does not mean you're changing a trend. It just means the market might pause. A market that's gotten even more bearish while I was gone is soybean oil. It's reinstated the pattern of lower highs, lower lows. It's staying under the 18-day average of closes, the red line, and it's riding the lower Bollinger Bands. Market that ride those bands are telling you that rallies are feeble, and that's what you're getting right here. You'd have to take out 29.19 in order to tell me that anything other than a bounce here is anything. Did I say 28.19 in order to break the downtrend cycle of the lower highs, lower lows? Sorry for being wrong there. In the corn market, the pattern, as I look at it, momentum still down but oversold. The market back to the lower Bollinger Band. It had been like this before, then it bounced away to the 18-day average. It still looks to me like this market has got selling pressure. And all I keep hearing from people is, oh, you don't want to be short that corn market. You don't want to be short that corn market. I keep hearing that. Yet the market was 360. Now you're down to 347.5. I don't know. I think you don't want to be long the corn market. In the wheat market, as I'm looking here, we can take a look at the slow stochastic reading. Notice that one of the numbers is over 20, the other is 18. Yesterday, one of the numbers was over 20. So all we have is an oversold condition. We have a market that's got lower highs, lower lows in an oversold condition, keeps breaking on new break lows down to the Bollinger Band and seems to bounce away. There's still no sign here of a bottom. You'd have to take out 532 3/4 to negate the pattern of lower highs, lower lows. The sugar market looks to me like a market that has run out of this upside momentum. When I was talking to you last week, you had the pattern of higher highs, higher lows, and before I left I said, now you're into this resistance of the upper Bollinger Band and the green line, which is the 100-day moving average of closes. Now the market has been knocked all the way back down from 1180 to today's low of 1060, so you have taken all this good action and destroyed it at one time. The longs probably stepped out in those areas in different ways. Now the question is, what's next? My guess is rebuilding. In the coffee market, I see an oversold market with a pattern of lower highs, lower lows, but the one obvious thing has been and continues to be that each challenge of this 18-day average area is a failure. So until something changes, this market has a problem, probably in part due to the falling Brazilian real. As that market keeps dropping, you're taking coffee prices ever lower, and that's what I think is weighing on this market to a degree. Cocoa is caught in a narrow Bollinger Bands. The black dashed line on each of these charts that I've been showing you are Bollinger Bands. And Bollinger Bands often give you an idea of resistance, support. Now the question is, if you're going to take out 2205, will you start another downtrend in the market? And you might. My dilemma is you're in an oversold condition down to the support of Bollinger Bands. There's not a high probability trade that I can make out of that. Cotton today fell again. And the amazing thing with cotton is we didn't get any bounce at all from Hurricane Florence. None whatsoever. So this market's now got lower highs, lower lows. The question is, what about today's high? Because it's an outside day down, if you take out today's highs, I could call that a bear trap. And I'm also concerned that, notice the Bollinger Bands, how sideways they're going. Will this offer some of the support against 80.78? We'll find that out soon too. In the meat markets, it's been up, and away. This has been a bull market, and it broke out to a degree of the sideways Bollinger Bands that it had over the past 3 days. See that right through there? It's not the ideal setup, but it certainly was one where you had higher highs, higher lows. You broke through that on Friday, and today you didn't give much of that back. It is 2 days in a row over the upper Bollinger Band. The odds of staying over Bollinger Bands are 5% of the time. My rule of thumb is that when you get consecutive moves over it, each one counts as one of those percentage points. You might say, what happens if you go beyond 5? Well, then you go beyond 5, but go back and play the percentages. Remember, you're not trying to get short over a Bollinger Band. The question is it worth taking money off the table? In the feeder cattle, it's the same thing as the fat, 2 days over the upper Bollinger Band, but here's something that's more powerful. Whenever you take the momentum called a slow stochastic and you put both numbers over 80, it's called embedding. And when the market embeds, what often happens from that particular cycle is the market tries to work higher. If there's a Bollinger Band near it, sometimes it just glues itself to that and keeps the momentum going. The hog market, I'm seeing a lot of resistance between 57.87 to 58.02, the 100-day average upper Bollinger Band in an overbought market. Now that I'm back from my 2-day respite, Wednesday, Thursday, and Friday actually, it was a ball for me to get out. I'm now ready to start writing my commentary. So tonight I'll gradually break back into it. The one thing I'm waiting on, normally I do a big portion of it already, is I'm waiting to see what the president says, and I don't know just yet. But if you haven't received a free issue of mine, and I put them out twice a day, you can call my staff, you can go to our website, sign up for it, and you can click up here. I'm going to also be writing some metal reports, getting back into the loop now, and next week we'll probably have another live chat room. I understand there was confusion this past week with some of you getting an email that the passwords didn't match up and others getting it. We'll make sure it's right next week. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow. Take care now.